All right, my name is Tommy Shaw, and on today's channel, what I'll be talking about is essentially whatever you need in order to succeed in life. It's pretty much a test. I'm testing out this information to see exactly what people want to talk about. And my channel is mostly about finances, about real estate investing, how to invest in stock, bonds. So, any questions that you have concerning, hey, I want to get started in real estate, what should I do, how to get that financing, and how to get started in investing. So, like today, I'll start like that. When I have a question, I'll go over the question. You can talk to me about a business, how to restructure a business, where business go wrong, where they go right, where why most people fail in real estate and why some people succeed in real estate. Because like over the years, I grew my real estate business. I went from zero at 19 years old, and today it's almost $2 million worth a portfolio worth of real estate. So, and if the sound's not good or anything, just leave a comment and tell me. We can't really hear anything or the microphone because I'm making some tests, and it's like the one of the first times that I go live. So, like, remember, you have me one on one. Like right now, there's a person listening. That person, you can ask me any questions. It doesn't matter where you are, okay, in life right now. You can listen, you can get some information, you can benefit from this information, and don't be afraid just to ask questions. Or if you want to be entertained, you want to go in a certain direction, and you're wondering what can I do to get started in investing and anything like that. So the first thing I always look at when investing is, of course, profits. Okay, there's many ways to determine profits. You can, yeah, it's all the revenues minus expensive, and then you get a profit. But sometimes amortization can be included, which will reduce your profits, and you won't be able to see exactly how much the business is making cash flow. So sometimes profit and cash flow can manipulate the numbers to make it look like it's not very favorable or not. So the first thing we're looking at is how much are your assets generating profits. So when we have a balance sheet, on a balance sheet, this can be personal or it can be in through a business. It doesn't matter. It's the same thing. You have your assets on the left and you have your liabilities and equity on your right. The right hand column is how you finance your assets. Okay. When you're looking at your assets, the right hand, your debt, your equity, is how you're going to finance that asset. So it's very important to understand that liabilities and equity cost something. The shareholder, when he's inside that business, he wants return on that money. He's not going inside that business to support you. Okay. So how you're going to finance that deal is going to depend on your capital structure. How much debt to equity ratio are you going to use to finance that deal? Because it's very important to understand this question. If you don't know how much your policy is, you won't know how much money you're really making. The question is not only about how much profits the business is making, but it's how it's structured, because the way you're going to structure that business is how you're going to get your real income. Because if you're structured in a way where you only have 100K in a business and you have $1 million of assets, and that asset is giving you 7%, well, you're making 70K on 100K. That's a 70% return. Okay, of course, in this example, I've used a 10 times leverage, which is a lot of leverage. You have to remember that in this scenario, yes, you're making great returns, but the problem is that you're taking a lot of risk. And you can do this in real estate, you can do this in a business, and you can do this in your personal home. So at this point, just remember, you guys, if you have any questions, you can ask questions. Hey, I didn't really understand that. That's a really good point, because what I see a lot of people doing is that people focus on paying cash for something. The problem with that is that you're losing the ability to increase your ROE. Okay, you don't want to take advantage of leverage, but you want to take advantage of the right amount of leverage. Because if you can leverage something at 50% and you're using debt at like 2 to 3%, well, that 2 to 3% is deductible. You can put that like a tax write-off in your business. So it's not a 2 to 3%. It's not costing you 3%. It's actually costing you like 1.6%. And when you remove inflation from that, it goes even lower. Okay. Sometimes when you borrow money, I'm not saying borrow money to buy use your credit card to buy anything. That doesn't make any sense. If you're using your credit card to buy stuff and you're paying interest, that's not intelligent. What I'm talking about is when your interest is close to inflation, that's smart. And that's something that's telling you if you're smart or not. Because if you have something like, let's say, to know if it's a smart decision or not, okay, in life, just remember that if the interest is close to inflation, the cost of interest is close to inflation, it's a smart choice because the banks know you're making a smart choice. When you're going in real estate, the reason why they give you low interest, if they're giving you a high interest in your real estate deal, it's because it's a bad deal. The bank is essentially telling you this is not a good deal. This is a risky deal. While if you're going into real estate and it's close to inflation, or you're buying something close to inflation, I'm not talking about a car here, because a car, they say it's 0% interest, but they're charging you more upfront, or that's it. The interests are at the front end. They're not during the loan. So remember that. If inflation is 2%, okay, your inflation is at 2%, and your cost of interest, say on the credit card, is at 18%. Is that close to 2%? No, it's like almost 6 times more. Okay, so that doesn't make any sense. The credit card is telling you don't pay interest on this. This means don't use your credit card if you don't have money in the bank. Use your credit card as a debit card. You already have money in the bank. You were already going to buy what you were going to buy, and you're using your credit card as a debit card. And once you get home, or once a week, you update your credit card, you put it to 0, and you accumulate points. This gives you money while using your credit card. This is free money. This is smart money. But when you pay interest to that credit card, that doesn't make any sense. So let's get back to this example, okay? The reason why I'm giving all this information is to make you realize that banks are telling you within the decision that you're taking if it's a smart decision. Because if it's at a 1% interest rate or 2% interest rate, you can deduct that interest rate and use inflation. And sometimes, like at this scenario, when you deduct your taxes, you go down to 1%, and inflation is at 2%. So 1% minus 2% is minus 1%. So the bank is essentially paying you to borrow money. Okay, hopefully this makes sense, because a lot of people, when I tell them this, they don't believe it. It doesn't get in their head. They're so focused on this can't be true. This has to be false. And some people even tell me it's a rich, quick scheme. I'm like, how do you perceive it that way? How do you take the information I just gave you and perceive it that way? It's because they have a scared mentality. It's preventing them from evolving and learning. Okay? So the reason why okay, let's go back to how this works, okay? Why it works this way. You first must understand inflation. When you understand inflation, then you can understand why this works. Because a lot of people look at inflation as if something is going higher, prices are going higher. Oh, that's due to inflation. Okay. Well, inflation, what is really happening is it's debasing the value of the currency. Okay. Say $100,000 today. Okay. You borrow $100,000 today, and you pay it back in 1 year. or you leave it, you don't pay it back in 1 year, you just leave it sit, no interest cost, okay, that amount will now be valued at $98,000 because in 1 year money loses value. So once you understand this, is that savers are losers. Okay, the reason they're losers is because inflation is eating their money faster than the interest that they're earning on it. But if you borrow money close to inflation, inflation becomes your friend. And the reason why they created inflation is because imagine if we lived in a world where there was no inflation, nobody would spend right now. It's an incentive to make people spend now because it's better to spend now than to wait 2 years before buying something because it's going to cost more in the future. This is an intelligent system. Okay, anybody that judges this system doesn't understand it. If they understood why they did what they did, they'd be like, oh my God, inflation is very smart. It's smart for people who use it. Okay. But if you don't use it, you don't understand it, and you think, oh, prices are going up every year and blah, 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 you're just blaming everything, you're not going to understand this information. Okay. So in 1 year, you go from 100K to 98K. This means that inflation has paid some of your debts. And if you keep doing this for a very long time, it's going to be worth almost nothing in the future. So this is why real estate investors love debt. We love debt because you can take a long-term debt and always refinance, get that refinance, get that money in your bank account, and you don't have to pay taxes until you sell. And all those interests becomes deductible. Hopefully this makes sense, or you're just saying, oh my God, I don't understand anything that this guy is saying. If you don't understand, or you're struggling to understand something, just let me know. Just leave a comment and let me know what you think about the information. Okay, I'm gonna make it simpler. Is there something, maybe it's not even simple, maybe you're like, well, I need more, I need something with a little bit more meat or anything, like just let me know where you situate in this information, because like capital structure is like the second part in getting richer. And it's what I've noticed over the years is that a lot of people who focus on returns, solely on returns, are going to go into stocks. But the problem with stocks is that, okay, you get that 7, 8, sometimes 10%, but you can't use capital structure. This means you can use leverage, but it'd be suicidal. Nobody uses, like everybody talks about real estate is risky. Stocks is risky. Stocks, if you use leverage in the stocks and owning shares and mutual funds, any kind of business that you invest in, if you're putting some money that's not yours in there, it might disappear tomorrow. So I always say that it's better to understand capital structure and investing and how much money that money is making, that asset is making. So that's it. And why I love capital structure is because it gives you the ability to grow fast. Okay? Because every time, like let's say in this example, you save $70,000 because you made $70,000 the first year, that 7% return, but you were using 10 times leverage. So now you're at $170,000 after 1 year. Because remember, this is a balance sheet. Balance sheet takes a photo of the present moment, what's going on right now. And then 1 year from now, you can see the financial statement between the first balance sheet and the second balance sheet. And this is going to show you a story of what happened inside the business. And or your personal life, like when you're tracking your finances, you're doing exactly the same thing. Like people have a hard time to notice that an incorporation, their balance sheet and your balance sheet is the same thing, except that you in your own personal life, the difference is you don't use amortization because you don't say, okay, my car has devalued this much. You're just going to leave it at $24,000 for 1 year or 2 years, 4 years, whatever. But what you should do is decrease its value to get the real amount of net worth. Because if you don't know how much you're worth, it's going to be hard for you to know if you're getting richer through time. It's going to be hard for you to see an evolution if you're doing something right. Because when you're buying a car, if you're buying stuff that depreciates all the time, you're buying assets that work against you. You're not buying anything that can make more for you in the future. So every time you're thinking about, okay, I'm going to buy something that's going to give me more in the future, you're making an investment. And that's why investment grows, because over time those dividends get back invested and you can turn that into another seed, and that seed can become a tree. And a tree, if you have 100 trees at a time, well, it grows over time. It can grow for 25 years, 30 years. Any system that land can grow, because they're not making more land. There's not, you know what I mean? It's not something that gives you cash flow, but land will always appreciate because there's always more people on Earth, and there's less and less land that you can cultivate to put agriculture or trees or anything on there. Okay, so that's what I wanted to talk about. Okay, and now say you wanted to grow the same pace as the year before, you would have $1.7 million of assets in just 1 year. You save that $70,000, and now your business is worth 1.7 million. Of course, you have to use depreciation because a lot of the equipment, anything you own will lose value over time. So that's that for that. And imagine if you use this system, you're saving money and you're using leverage and you're getting greater returns. Over time, billionaires use this knowledge. They use this information to become wealthy in the future. They use this information to become a lot more in the future, because like when you're looking at just saving over time, you can become a millionaire over time by saving all your money, but you'll be scared for 25 years. You'll be living in fear for 25 years every single day, just being careful, and everybody's going to be calling you cheap. He's cheap. And what do cheap people hate? They hate being called cheap. Nobody likes to be called cheap. And by the way, cheap people think that other people are just plainly stupid, and that's why they're spending all their money. That's how they think, okay? But I prefer thinking why, like almost in the same philosophy as Robert Kiyosaki, because it depends on your level of awareness. If you're on a level of awareness of fear and you don't know you're based on that emotion, on that feeling, you won't know that all that you're doing is based on the information that you know what to do. You know how to budget well because you're scared. You're scared of not having money for tomorrow. That's why you're so good. While on the other hand, when you're focusing on learning to invest and seeing more value in life and offering more value, because when you buy real estate and you flip it or you make it better, you can raise the rent. Well, the person that's living inside that building can get something better. He's living inside that building and now it's all renovated, and it's giving you a better ability to, everybody wins in that scenario, because the other person, you raise the rent, you get a contractor in, he works, you pay him, and everybody's happy in that scenario. While when you're only solely focusing on saving, the problem with that is that somebody has to lose for you to win. And it's not something that I believe in. I don't believe in, okay, I'm going to sacrifice my money and somebody else is going to lose, okay? Unless you have a goal. If you have a goal that you want to acquire more real estate, okay, I'll be 100% with you guys, like 100% with you guys that you should save that money to buy more real estate, because now you have a reason to save that money. If you're saving to save money, there's no goal. If you're saving for retirement, okay. If you're saving to have to buy a car and not pay interest or anything, and you just want to be smart with your money, that makes sense. Okay. But if you're saving for saving and you don't know why, and you're just scared and you're making everybody sick around you, that doesn't make any sense. Like, you know what I mean? You don't want, because you're scared to make other people, because that emotion is very powerful. It's a, like fear-based emotions. It's like a rotten apple. It'll contaminate people that are around you. Okay. So if you have any questions concerning what I just said, you want to know something, feel free to ask questions. You can comment in the section on the right, and I'll be happy to answer questions. Remember, this is like a one-on-one conversation. It's worth a lot of money, because the reason why I'm saying this is because people charge a lot of money for this. And when we can use this information in our favor, then we could use this information and put it in our life. And my goal is to give practical advice. Like, once you listen, you can implement. And a lot of people tell a lot of stuff, and you finish the video and you're like, what can I do with this information? Like, look at all the videos. Most of them, you finish the videos, they're good entertainers. Yeah, they're good entertainers. Like, you'd listen to them all day long. Like, it's like watching TV. Like, it's awesome. But you have to be careful between, okay, is this useful information? Am I consuming information, or am I knowing something better that I can improve my life? And exactly. So I'm also an author. I've also written books on real estate, how to invest. I've got the multiple sources of income. I got the millionaire's knowledge, investing secrets. I've got this millionaire secret knowledge, books on the mindset of how to get investing. I'm telling you guys this because the reason why I'm saying it is that it'll be easier if you have any questions or comments, or I'm just giving you basically a lot of information so that I can share and make it easier for you guys to ask questions. Like, that's all I want to say. So what I can mention also is exponential growth. Okay. This is something that I am obsessed with, because the reason why I'm obsessed with exponential growth is because it's a concept that not a lot of people can put in their life, because it requires time. It requires a lot of time, and most people get discouraged before they can get the returns. Why? Because it grows very, very slow at first. Like, say you're half a penny and you double it every day. It takes a while before it becomes something, or you double it every year, or you double it. It might take a lot more time. So when you're going into a job, you get instant results. Am I saying a job is bad? No. I believe you can become a millionaire by having a secure job. I would never recommend somebody that doesn't know how to create value to quit their job. That would be stupid. If you have a great career and you're able to make $50,000, $60,000 and you're able to save money, why not take that money and invest it? Like, when you have time, when you go into a business, you don't have any more time. You can't think about investing in stocks. You can't think about investing in nothing. It's almost assured you have to succeed in a business for it to make money. If you don't succeed in having a business, it's impossible for you to save money and invest in having a retirement. So why would I recommend somebody not having a job? No, I would never recommend that. I would recommend that you have a very secure job so you can get interest, a bank loan at a very low interest, and invest. Everybody I've seen investing in real estate are all people who have secure jobs. Why? Because that secure job gives you the security to justify the bank making you a loan. When you don't have a secure job, the banks are scared. They're like, oh no, we can't lend you some money. We'll lend it at 7%. If you're crazy enough to take the loan, we'll do it. We'll do it at 7%. But that doesn't make no sense. Well, they'll, like a person like me that used to be in the military, I could get a loan at the person's the person that was working there, making a 2 or 3% return. They were happy with that because I was a secured investor. So that secured investor, I was able to borrow a lot of money and go into real estate. Okay, so I'm not saying that having a job or not having a job, I would recommend most people having a job because most people don't know how to create value on their own. It's hard. Okay. Even if you're a workaholic, even if you're good at working and just doing something, creating value, you have to gain confidence. You have to find ideas. You have to implement ideas. You have to execute. You have to become your own boss. I'm not talking about, uh, offering your own personal service because that's just having a other job named after you. Okay, it's the same thing. If you're a masseuse and you're working from home, that's a job. You have a job that's working from home. It's the same thing. Okay, and I'm not saying that's bad or good. I'm saying that's excellent when you're saving money and investing. Okay, a secure job can make you rich. You can become very wealthy by having a secure job, and most people, I would recommend them having that. When you have a job, what happens is that it's a linear action. It's easy. You exchange time, money, time, money. You get an instant result in 2 weeks. Okay, if you want to start in your own terms, some projects that I've started in my life took me almost 3 years before I got results. But when I got results, they started compounding and making a lot of money. But 3 years, most people could not stand losing for 3 years and then winning after 3 years, and then you're overcompensated for all the results that you did before that. So that's why I recommend most people going for a secure job. But you have to remember, anything that is exponential growth, anything that's exponential growth is going to surpass that income in the long term. The only way this isn't true is just that person is working for somebody and he's investing at the same time. Like I just mentioned, that I'm talking about, I'm comparing a job to somebody that starts a project and not get discouraged because I don't want them to lose hope or whatever. So exactly. So we get results in the long run. And when we get those results, we're happy that we did them. And when we're happy, because when I went to real estate, at first it didn't seem like it was work. It didn't seem like I was getting any result. But it took a long time before I started getting those results. And when I got those results, I was happy that I did them. But they took a long time. And when people look at that from the exterior, they're like, he's overcompensated. What is he doing? Or whatever. Okay. Because you have time for other projects. And I always like to mention that because exponential growth takes a lot of time. It takes a lot of time, and it's not made for everybody. It's not made for everybody. I just want to mention that I'm doing some tests on the videos. You got me one-on-one video chat. You can listen to me anytime you want. You can exactly. You can comment. Is the sound okay? It's always good to get the feedback and just to know what's going on. Some people want to be entertained. It depends on the type of person that you are. And my goal is to really give you the most value right now. And I'm just chatting along. Um, exactly. So to get a question, I'll just go here. Exactly. So I can be talking about anything. I can read my book. I can open up a page and talk about what I mean by inflation edge. What I like to use though is anything that creates abundance. That's what I like to mention. That's what I like to see. And I think that's just going to be it for today. It's half an hour. Half an hour. Was doing some testing. I was seeing what the market was doing and how people responded, the interaction, and we'll see how this does. So far, I'm pretty satisfied with like spontaneous talking. So, all right, then, if you guys have any questions, just comment down below. It's going to be a live video, it's going to be up there. And most of the time, I was deleting them, but this time, I'm going to keep it live so that people can see and comment and just tell me some feedback. Okay, yeah, I really like when you're talking about that. And like, remember, I have a small channel right now, but I have a lot of results. And you guys are able to have me for free. Okay? This is the price of being first. When you're first, you get better service. You get preferred service. You can have a one-on-one conversation. You can ask me questions. You can say, I want to know more about this. I'm curious. I'm struggling with this. I have a hard time to get over this. Let me know. At least I know. At least I'll know, okay, let's work more on this. Then I'll know the audience that's following me, where they're situated and what they're struggling with. And I'll be able to help you guys get the most value for the time that you're spending with me, because this is like a community that we're sharing the same interests and we're growing together. And that's what I really want to put as a message. I don't want to put myself as better than anybody. I would never want to do something like that. And I wouldn't want anybody to feel inferior to me, because I'm not superior and nobody is inferior. And the only thing I want to communicate is to show that when we want something, it's possible. But sometimes we need help. Sometimes we need a little kick in the butt, or we just need a little bit of information that was digested in a different way. And like when you listen to some people just go on and on and on, and you don't even know what they're talking about. They're talking about like mental blocks and stuff like that. But how can you implement if you don't even know what he's talking about? Okay, it's good to have a picture of something, but if you don't know how to use it, what is it good for? If you don't know how to use the information, nobody can use that information. So if nobody can use that information, for me, it's going to be worthless. And my goal is to give practical information that people can really use in their life and can really evolve. So anyways, that's it for today. Hopefully this video turned out good. The volume and stuff like that, I'll be checking that out after. Leave comments down below. Feel free to subscribe. You can, like, if you want more of this information, you want at a certain hour, it'd be better if you do it at 7 o'clock or 8 o'clock or whatever, just to see where the audience wants to go and to give you guys the best service that I can give. And I'll be finishing with that. All right, see you guys.